Hello, dear viewers. Artificial intelligence is coming with a vengeance. It's coming to take your job, unless you can become 10 times as productive. Artificial intelligence also creates tremendous opportunities for those who are investing in the stock market. My name is Clive Thompson. I've been investing money for 50 odd years. I used to make a lot of mistakes. I don't make quite so many now, but I still make mistakes. Each year on LinkedIn, I publish a portfolio. It's not something that most investments people do. Portfolio last year was 55 stocks, and this year it's 40 stocks. Portfolios are called Beating the Benchmark 2024 and Beating the Benchmark 2025. I'll let you be the judge of whether I'm doing better than the indexes, but anyone who'd like a copy of the spreadsheet is welcome to write to me on LinkedIn. I've sent it to hundreds of people. And now back to the companies and artificial intelligence. In this video, I'll be naming 14 stocks. These are 14 stocks that either I have bought or I will buy for myself after months of research into which companies are the biggest beneficiaries of artificial intelligence. Now, don't get me wrong, almost every company on the planet will use artificial intelligence in some way, shape or form at some point. The companies I've chosen are companies which can benefit massively from implementing artificial intelligence, and not only that, they've actually said that they're using it and talked about their savings. But I'd like to stress one thing. Although I'll be naming specific companies, this is not investment advice. These are companies I've chosen for myself after months of research, but they may not be suitable for you. But let me just give you a few fundamentals about the companies. Based on the historic price-earnings ratio, the trailing price-earnings ratio as it's known, the average price-earnings ratio of these companies is slightly in excess of 14 times last year's earnings. And as far as looking forward to next year's earnings, as forecast, the average price-earnings ratio is 11.88. So we're going to see some growth in earnings per share if those forecasts come true next year. They're also quite good value companies. First of all, we had the low price-earnings ratio, but secondly, we've got quite a decent dividend yield. Every company I'm going to name has a decent dividend. The average dividend yield is 5.34%. That's a pretty high yield and shows you just how cheap some of these companies are. Now, the names of these companies are going to surprise you because you're probably not expecting many of the names I'm going to mention, but they are major beneficiaries of artificial intelligence. They're also large blue chip companies. These are the sort of companies that anybody should be happy in having in their portfolio. The average market cap of the companies I'm going to name is $121.9 billion or equivalent. Artificial intelligence, or AI as it's known, is coming with a vengeance. Almost every company on the planet is going to use artificial intelligence at some point in the future. But there's many companies which are already using it now, and they're saving money now, and I've identified those companies which are leading the charge. Now, I'm only going to mention 14 or more, maybe a few more names today, but there are many companies which could qualify. The companies I'm naming today, I've done months of research looking into how they're using artificial intelligence, and I found out that these particular companies are really benefiting big time thanks to the AI, and I'm expected to see higher profits and higher stock market prices when people wake up and realize that they should be into these types of companies. You want to be in the companies which are ahead of the curve, and these are the companies that I have chosen after months of work which are likely to do very, very well. Now, just a little bit of disclosure, I probably own shares in all of these companies, and if not, I'll probably be buying shares, and I'll probably buy more of shares in all of the companies in the near future. So what exactly is artificial intelligence doing for companies? Well, it's hundreds of things, but I'll just name a few so you've got an idea. It's helping them speed up their processes. It's reducing their costs. It's reducing the number of errors they make. It's improving efficiency. It's automating processes. It's developing new products. It's managing their supply chains and hundreds of other things. But just to give you a feel for what can be happening inside a company, I'm going to name one company to start with, which is on my list. This is a company I have bought, and I would probably buy more of it. This company is called Novo Nordisk from Denmark. It's a very large company. It's worth about $240.5 billion. It's a major pharmaceutical company, one of the biggest players in the world. Novo Nordisk, and I'm just to read to you, it uses AI to accelerate drug delivery by screening billions of virtual molecules to identify novel compounds. And since early this year, 2025, Novo Nordisk has been using Anthropic's Claude 3.5 Sonnet AI. That's an artificial intelligence engine. By the way, Claude 3.5 has now got a better version called Claude 4.0 Sonnet. It's been using Anthropic's Claude 3.5 Sonnet AI to draft regulatory drug documents. The system reduces errors, and here's the really important point, listen to this carefully, it slashes document preparation time from 15 weeks to just 10 minutes, less than 10 minutes. Previously requiring over 50 writers, I repeat that, they previously required over 50 writers, the task now needs only 3, with costs lower than a single writer's salary. So that's an example inside one company how AI is transforming their business. It's making them far more efficient and faster to produce things and reducing costs. The case for using artificial intelligence is becoming more and more compelling. It can work 24 hours a day, 7 days a week, 365 days a year. It doesn't have holidays, sick days, kids, or doctor's appointments. It doesn't need a cubicle, or a chair, or a desk. It doesn't waste time by the coffee machine talking with colleagues or looking at its smartphone. It doesn't annoy its co-workers. It doesn't even ask for pay rises. Now let's start by looking at some of the companies I've been looking at after a lot of study. I've tried to pick out those companies which are way ahead of the curve in using artificial intelligence in their businesses. Now, in general, you're going to find that the companies are very large companies. The larger they are, the more employees they've got. And if they've got a lot of employees, those employees can be replaced. I don't want to say that I'm approving of that, but I think it's something which is inevitably going to happen. Let's face it, a typical AI could probably do 50% of your job today, and with a little bit of programming, it probably could do 100% of your job. And I bet the guys in the IT department are already designing your replacement, even if you don't know it's happening. So there'll be a lot of cost savings in companies, whether it's good for mankind or not. So first company, it's called Nosk Hydro ASA. Nosk Hydro is a Norwegian company, and it's involved in aluminium and in hydroelectric power. Just looking at their website, I see lots and lots of areas of saving, but I'll just name a few. They mentioned their Qatar smelter, where they're cutting downtime by 20%. They're cutting maintenance costs by 15% thanks to AI. That's because the AI is predicting the equipment issues that might happen. In their Norwegian smelters, their AI is adjusting the voltage settings, and apparently that's saving 5 to 10% on energy costs. And as far as hydropower generation is concerned, they're optimizing everything there to save costs at the moment by 8 to 12%. And just looking through the fundamentals for Nosk Hydro, I see that it's got a trailing PE ratio of 11.6 last year, forecast 9.06 for the coming year. Dividend is 6.81, that's quite a massive dividend. And market cap of Nosk Hydro it's in Norwegian kroner, but if you translate it to US dollars, it's about $11.8 billion. It's one of the smaller companies on my list, but $11.8 billion is no minnow. So I said that companies with large numbers of employees are obvious beneficiaries. Well, Nosk Hydro has 38,000 employees. That's a large number. So they're an obvious beneficiary. The next company is BNP Paribas SA, the French bank. They're huge. There's 78 billion of market cap. They're operating in 65 countries, and they have a massive number of employees. It's 178,000 employees nearly. That number will probably go down over the years which follow, saving them a lot of money. What do they say they're doing in the AI field? Well, they say, for example, and I'll just give you some of the examples, there's many more. They're saving 30 minutes per mortgage file, cutting the approval time for mortgages by 50%. They're detecting fraudulent transactions in real time, reducing their fraud losses by 10 to 15%. And they're streamlining contract analysis, and that cuts their administrative time by 30%. So a lot of savings happening there already. And BNP Paribas, let's have a look at the fundamentals. Well, I see here that the market cap is $98.5 billion, so absolutely mega sized company. They have a nice low price earnings ratio. Historically, last year's was 8.1 times, and the price earnings ratio expected for next year is 6.85, which is pretty low. And as far as dividends concerned, it's nice and high. This is the dividend which is forecast for next year, 7.34%. The next company on my list is the Anglo-Dutch consumer goods giant called Unilever PLC. It's got a market cap of 110 billion pounds, or how much is that in dollars? That's $133 billion. And it's got a huge number of brands which are sold in over 190 countries. So what's it doing in AI? It's, well, this is just a few lines. Of course, there's many other things. It's reducing waste in its ice cream production by 10%. It's predicting product demand and cutting inventory costs by 15% across the entire global supply chains. And they say it's speeding up product development, reducing their research and development time by 50%. So a lot of good things happening there at Unilever. What are the fundamentals? Well, I said it's a market cap of about $133 billion equivalent. The price earnings ratio is a little bit high. It's 24.6 times, and that's a historic. And the forecast for next year is 18.9 times. Quite a nice dividend yield, 3.49%, perhaps one of the lower dividends in my list. But of course, this is a large, well-run global company which has been around for donkey's years, selling something we all need, specifically food and beauty care products and so forth. So they're not going to go out of business anytime soon. So companies with very large numbers of employees are probably going to use AI to get a reduction in the number of those employees. But of course, it depends what the employees are doing. If they're out and about and digging up mines, it's a completely different situation than if they are sitting at desks. The ones who are most at risk are sitting at desks, and in that respect, the kinds of companies which have a lot of employees at the desks are banks and financial institutions, so such as insurance companies. So you're going to see 3 insurance companies mentioned, and there's obviously a bank. I mentioned BNP Paribas, but here's my first insurance company, which I think is going to do really well thanks to AI. And the company is a German company. It's called Allianz SE, Société Européenne, that is. They've got a market cap of roughly 120 billion euros or 150 billion US dollars. They're operating in 70 odd countries. What do they say they're doing in the AI field? And these, in all cases, in every case I'm mentioning, the company has mentioned AI somewhere, and also we can see what the cost savings are in most of these companies. But let's look at Allianz. So they say they are able to now process damage claims in minutes per claim, thanks to AI, reducing costs. they can use AI to detect fraud in insurance claims. They're cutting their losses from fraud by 10 to 15% a year, and they're personalizing their policies towards customers, reducing the churn by 15%, and thus boosting their sales. So they're doing very well. I just found a few other things. It says here, I'll just read this to you. Allianz's Insurance Copilot, a generative AI tool, streamlines claims management by automating processes and improving efficiency. The AI-powered, developed by Allianz-owned Control Expert, that's CE, allows customers to submit photos of damaged vehicles, e.g. for motor claims, and receive immediate settlement offers. The process, which takes minutes, uses computer vision to assess damage, confirm coverage, initiate payments, significantly enhancing customer satisfaction and reducing claims handling time. So you can imagine those sort of things applying to many insurance companies all around the world. And funnily enough, all these insurance companies are dirt cheap. So let's take Allianz with their 152 billion of US dollar market cap. It says here that their price earnings ratio is 14 times, that's trailing, and it will be 11.7 times forward looking if they make their numbers. Nice yield, fat yield of 5.17%. So that's a great company to get involved in, I think. Obviously, this is not investment advice. It's just me saying that I like the financial companies and the insurance companies in general. I will name some of them, but there's going to be many more out there which will be using the same techniques to reduce their costs. So don't think you've got to go for this particular one. So I'm going to have to speed up a bit because otherwise I'll be here all night. Next company on my list is Honda Motor Company in Japan. The symbol is 7267 for those who need to look it up. It's an automotive giant. It's got a market cap of 6.5 trillion yen. In US dollar terms, that's $41.7 billion. They're making cars, motorcycles, and so forth, and it's operating in 150 countries. And they've got a huge number of employees. I haven't got the figure in front of me, but it's obviously large. What do they say they're doing? Well, they're using AI to optimize their assembly time. They've already saying that's already saving them 20% in production time, lowering their costs. They are predicting maintenance needs for factory machines, cutting downtime by 15%, and they're enhancing vehicle design simulations, saving 25% on development costs. Just a few other things they've got. They've got a state-of-the-art electric factory in Guangzhou, China, and they've got AI-enhanced welding process, automatic guided vehicle to transport heavy components like battery packs. In that factory, it's reduced the need for floor staff by 30%, and their workforce is producing 5 times more cars than the global industry average. And they mentioned they've got a lot of robots in the factory as well, which are guided by AI. Let's move on. Let me just give you the fundamentals on Honda Company. Price earnings ratio 7.8 times last year. Forecast is 6.21 times this year. Again, a nice low price earnings ratio, in line with many companies in the automotive sector. But still, they're growing their earnings nevertheless. And the forecast dividend yield is 5.87%. Moving on, another area of companies which do very, very well, thanks to AI, is the telephone companies. The one I picked based on a lot of research is Telefonica in Spain. Telefonica, they've got a market cap equivalent to 30 billion US dollars. What did I get? Telefonica, yes. They're using a virtual AI for its customer relations. They say they got AI customer intelligence, AI-driven analytics to optimize customer interactions by predicting behavior, personalizing market campaigns, and identifying cross-selling or upselling opportunities. They also employ generative AI or employ AI and generative AI to manage complex 5G networks. So this is a large telephone company. A few other things they say. They're reducing, thanks to AI, they're reducing downtime by 20%. Their sales are increasing 10% thanks to AI personalization, and the call center response times are 30% less. In other words, they reply to the phone calls much faster, and as a result, they've cut labor costs by 30% as well. So that's Telefonica. A few fundamentals about Telefonica. Market cap 30 billion. Price earnings ratio last year 15.3. Price earnings ratio next year 13.5. That's forecast. Nice fat dividend yield of 6.44%. Don't have to buy Telefonica, you buy probably any telephone company, but this happened to be one where they've gone to great lengths to explain how useful artificial intelligence is for them in improving efficiency and reducing costs. Moving on, I'll go quickly through these. We've got AXA. AXA is an insurance company, same as Allianz. AXA SA is a French one this time. Allianz was German. Market cap is 103 billion US dollars equivalent, and they are doing the same kinds of things as Allianz is doing. A couple of words that I read here. AXA employs AI to improve the accuracy and efficiency of risk assessment in underwriting. AXA uses AI-driven predictive models to assess complex risks in specialty lines like marine, aviation, cyber insurance, enabling faster and more precise underwriting decisions. AI streamlines AXA's claims management by automating processes and improving efficiency. That's obviously taking photographs of the damage and so forth for AI to assess it. It says here, natural language processing and computer vision are used to analyze claims documents, images, and videos, enabling faster assessment of the damages. They say they've speeded up processing and handling time by 40% and reduced costs in that area by 20%. They got rid of fraudulent claims to the tune of 10 to 15% less, and they're increasing sales through optimization by 12% thanks to AI. Moving along, we've got to look at Iberdrola. This is the Spanish energy company. Got a market cap of 80 billion euros. It's a global leader in renewable energy, producing electricity from wind, solar, and hydro, and roughly 100 million customers globally. So they're using AI for wind turbine maintenance predictions. They cut downtime there by 20%. They've cut costs in that region by 15%. They're optimizing energy distribution with AI, reducing the grid losses by 10%, and they can now forecast energy demand thanks to AI, resulting in savings of 12% in production planning costs. So that's Iberdrola. A few fundamentals on Iberdrola. Market cap 117 billion US dollars equivalent, and the price earnings ratio last year was 21 times. This year it's forecast to be 16.3 times, and dividend yield of 4.37. So quite attractive. Another large company, it's a food company this time, Nestlé SA in Switzerland. Obviously, many of these shares, by the way, are quoted in New York as well as ADRs. But Nestlé's got 277,000 employees globally, and they are, when I looked at the website, everything they're doing is using AI now. I'll just read a few comments. Nestlé's proprietary generative AI tool, NestGPT, accelerates the end-to-end product innovation process. It analyzes real-time market trends and consumer insights from Nestlé brands, generating product concepts in just over a minute. This has reduced product ideation timeline from 6 months to 6 weeks, a 90% time reduction or time saving. AI simulates textures and flavors for plant-based alternatives, optimizing formulations to mimic animal-based products. They've reduced research into replacement research and development costs by 30% thanks to AI. They're having greater success with product launches thanks to AI. And they're using machine learning and sensor data to predict equipment failures, reducing downtime by 30 to 50%, extending the lifespan of their machines by 20 to 40%. So those are a few examples from Nestle. I mentioned earlier the pharmaceutical company, Novo Nordisk. They're big in diabetes and obesity. Obviously, they're saving a lot of time with document drafting. They're saving 90% of time. Drug discovery research and development is reduced, or time is reduced by 30%. And costs of R&D is reduced by 20%. And it uses AI to predict patient risks, reducing trial costs by 15% and improving trial outcomes. Let's move on to the next one. The next company we're going to look at is Rio Tinto PLC, the UK-Australian company which is mining all kinds of metals, but particularly iron ore. 60,000 employees worldwide. You wouldn't think of it as a company which would save a lot of money in AI terms, but here's what I found out. They have a rail network optimization using AI predictive maintenance models to enhance the efficiency of its 1,500 kilometre rail network in Western Australia. They're using consolidating data from 98% of their websites using AI. What else do they say? It predicts rail maintenance, cutting downtime on the railways by 20%, saving costs of 15%. They're optimizing truck haulage, saving 5% in capacity and fuel, and they're speeding up exploration, reducing drilling costs by 10%. So that's RTZ. Moving along, we go to Roche, the Swiss pharmaceutical company. It's a giant pharmaceutical diagnostics company. Market cap 220 billion Swiss francs, 260 billion US dollars. Some pretty good fundamentals here. Not quite as good as RTZ, which had a dividend yield of 6% and a P of 7. Roche, we're looking at 103,000 people working for them. They've got a dividend yield of 3.9%. Price earnings ratio is 26.9 last year. Forecast only 13.1 this year, or this coming year. And what else can we say about Roche? Yes, it says here they've got their G-Red and P-Red divisions, which are using AI and machine learning to analyze billions of chemical structures, predicting molecule-target interactions to identify novel drug candidates. For example, Genentech scientists use AI to screen potential antibiotics, analyzing chemical structures to identify those capable of penetrating bacterial membranes, reducing lab testing time by 50% to 70%. Thanks to AI, they've identified new therapeutic targets in neuroscience and rare diseases, and they're reducing research and development costs by 20 to 30% thanks to AI. Next one, we're going to look at Carrefour, the French supermarket chain. Now, that's a funny one for AI, but we'll see what they've got to say about AI. A large number of employees worldwide, 324,000 employees. I don't know how many of those are actually working on the floor of the supermarket and how many are back office. But you can imagine, even if they're working on the floor of the supermarket, it won't be long before the robots are stacking the shelves, and we have automated checkout desks where you do your own checkout instead of having a human being checking you out. Anyway, let's have a look at what Carrefour says. Carrefour was the first French retailer to use SAS Via, an AI solution to optimize its supply chain. The platform corrects and processes data from stores, warehouses, and e-commerce sites to predict demand and refine supplier orders. AI models detect stockouts in 1 hour, previously it took 2 days, and predict curbside pickups sales volume to the half hour, enabling precise staffing and inventory management. A couple of other things I found here. So market cap's 11 billion euros, 13,900 stores worldwide. Obviously, you know, big supermarket chain, they're selling food, household goods, electronics, and so forth. And the AI has predicted their stock needs, reducing their inventory costs and waste by 40%, automating procurement, saving 20% of processing time, and personalizing customer offers, boosting their sales by 15%. So other supermarket chains will be the same kettle of fish. So I haven't looked at Tesco or Walmart, but I'm absolutely convinced that if you do, you'll find that they're big users of AI too. Next, move on to another insurance company. That's the Ping An Insurance Group Company of China Limited. The symbol in Hong Kong, you buy this in Hong Kong, is 2318. So Ping An, huge mega insurance company. Market cap in Hong Kong, it's $900 billion. That's very roughly 123 billion US dollars. So 900 billion Hong Kong dollars. How is AI helping? Well, it's helping them process claims in minutes, saving 30% of handling time and costs, detecting fraud, saving 10 to 15%. We saw that elsewhere, other insurance company, and it's personalizing policies, cutting the churn rate by 15% and increasing their sales. Some nice multiples from Ping An as well. We're looking at a price earnings ratio of around forecast of around 6.7 times and a dividend yield of 5.26%. And I'll stop there. That was 14 companies. I'll just mention 2 other companies which are a little bit more expensive, which therefore I'm not recommending as such, but I bought some for myself. One is the German company called Siemens. They're a big industrial conglomerate, market cap about 140 billion. They've got 313,000 employees worldwide, and they're using it in factories and so forth. The other one I bought was BYD company. They make electric cars in China. About 95% of their cars are sold inside China, with the remaining 5% sold globally. They don't have any passenger vehicle sales in the United States, but they do sell buses and things in the States, and they're saving a lot of money due to vehicle design costs are down by 30%. What do they say? AI optimizes battery production, reducing defects by 10% and cutting costs by 10%. And they say AI predicts factory maintenance needs, reducing downtime by 15%. The reason I'm not recommending those two, they're both a little bit more expensive in PE terms, so they're not part of the 14 stocks that I've mentioned. If you like this video, please subscribe. There'll be many more videos talking about stocks, talking about how to buy stocks, how to choose them, some of the techniques I've used, some of the mistakes I've made. So if you like this, like it and subscribe so you don't miss the next one. Thanks very much, everybody. Have a lovely day.